Hey, what's up guys? Welcome to my channel. My name is K Neil, and today I'm gonna basically be breaking down why 90% of day traders fail at trading. This is my first video on the channel, and this is going to be a day trading channel. I'm going to be selling education to you guys. If you guys want any more information on any of the videos I make in the future, click the link below. I sell a course. Now, unfortunately, I don't want you guys to immediately think, oh, it's just another course seller. Guys, my course is only $10 to $25 a month for weekly lessons, trading breakdowns, and you can even trade live with me in my private Discord server. So, we're going to basically break down why 90% of traders fail, and I do have my chart pulled up so you guys can see. The first reason I'm going to say why a lot of traders fail, because there's three main reasons, and you have to identify and choose which one it is. First reason is too many people like revenge trading. Revenge trading is basically, let's say you're new to trading, guys, and you have no idea what you're doing, and you want to try entering a trade. And all you know is that up means good, down means bad. So let's say, for example, if you entered a trade right here, let's just say right here, if you entered this trade, you went up to right here, you got right here, start losing money, and you exited the trade, that's what I like to call, that's a bad trade, because you have to, first of all, you have to know what type of trader you are. That's one of the third reason actually why a lot of traders fail. But revenge trading is basically when you take a good trade, let's say you take a trade from, here to here, that's a good profit, and you sell, right? So now you're thinking, oh, okay, you did good in the trade. But let's say you didn't take the trade, or if you see it's going up right here and you enter up here and it starts going down and you lose money, okay? You lost money and now you want your money back. That's when you keep trying, and let's say you enter right here, or let's say you even just keep trying to trade and you just want your money back. That is called revenge trading. I want you guys to all understand, if you want to become a successful trader, you have to accept your losses, because you will lose in trading. It's just how it is. That's part of the game. So revenge trading is basically, let's say if you enter up here, or even if you have a good entry, let's say you have a good entry like right here. Well, this is not a good entry, but let's say you do enter a trade and it just goes down and you lose your money. I know a lot of people, they have their emotions getting away if they do enter a trade. Let's say, for example, if I'm trying to find an example. Okay, so if I enter a trade and there's a bit of drawdown, I will explain in the new video in the future what drawdown is. But if you enter a trade and you're in a bit of drawdown and you exit the trade, you already lost money, now you want to make your money back. But I want you guys to understand, every time you take a trade, let's say if you're taking 10 trades a day, you're making yourself more vulnerable to losing money. That's why you should not revenge trade, right? Second reason is a lot of people, and I say a lot of people, I mean 90% of people, think that the more you trade, the more money you make. It's not how that works. It is, but it isn't, because you can take like 20 trades a day and still lose money. So let's say if you want, or let me just say my example, because as you guys can see, I do trade on a 4-hour time interval, the daily and the weekly. I will break down all of this in future YouTube videos. If you want even more details, I have a course in the link in the description. If you take, let's say, multiple trades a day, you're making yourself more vulnerable to the markets. You're making yourself more vulnerable to losing money. And multiple trades a day just isn't always necessary if you have a proper setup. And I mean, what I mean by proper setup is, let's say, for example, I use a strategy where, as you guys can see, every time price is above this blue line here, this is called the EMA, is one of my indicators. Anytime price is above, it does this thing where it does a retest. So let's say, for example, this is December 25th of last year, 2025. If I entered this trade right here, and all I had to do was watch the markets, as you guys can see, every time the candlesticks reaches this blue line right here, it bounces, but it does not go through, indicating that this is a retest. So let's get this drawing right here. This blue, like right here, that is a retest. It's facing resistance every time it gets to that point. So basically you got a resistance, resistance, resistance. It breaks through, but not completely. So that's why you see a wick there. So it's still good to hold the trade, because you're in a way better position than you were if it went all the way down here. So that's when it goes up again, it bounces, it does break through, but then is quickly is quickly hit with a reversal until it goes up here. And this is what I would call a weak high, because this is the highest point until I will personally sell, because this is a crazy long time to hold a trade. But that is basically the strategy I use. And basically I'm going to have, if you guys want a further breakdown of my strategies and indicators, I will be making future YouTube videos on those. And you can also join the course to also, again, get access to everything I use. Is all in the course. I'm just here to break down live trading setups and show you guys, give you the mentality you should have when you go into trading. So that's the second reason. You should not take multiple trades. Third reason is, I think that a lot of people don't know what type of trader they are, because you have to stick to what you do. You have to stick to what you know. And you can't, you can try new things, but you're going to lose money. I guarantee it. So most people don't know if they are a day trader, a scalper, or a swing trader. I myself am a swing trader. That's why you guys can see I trade on the higher time intervals. I can already, I'm going to give you an example. This is a weekly time frame. And again, guys, in future videos, I will break down everything. If you guys have any questions, leave them in the comments. I may make an entire video based on that. But let's say, for example, this is the weekly time frame. If you guys don't know what that means, that basically just means that whatever time frame I select, that just means that each candlestick represents whatever time frame you're on. So if I'm on the 1 minute, each of these candlesticks are all 1 minute. So 15 of these are 15 minutes. Versus if I click the 15 minute, just one of them is 15 minutes. So that's what that means. But for example, you have to understand what type of trader you are, because scalpers usually trade on the lower time frames because they take quicker moves. And what I mean by that is basically, let's say they'll enter a trade right here. So right here, or maybe even over here, sometimes if they pay attention or if they trust what they're doing, then what they'll do after they exited that trade, made a profit, they'll re-enter a trade right here, a sell trade. Once it gets down here, they'll sell until, or they'll just wait and maybe exit the trade down here. That's what scalpers do, because again, these are the lower time frames. So all they have to do is just take, quick money. Also, guys, trading is not a get-rich-quick scheme. I know a lot of people think that. It takes a lot of patience and a lot of education to get through this. So then you have the day traders. Day traders usually trade stocks. I don't trade stocks anymore because stocks is just not for me. Day traders, what they do is they wake up at 9:30 a.m. each day during the week, and they wait to, obviously they do their trading. They may trade on maybe the 15 or 5-minute time frames. I break all this down, by the way, in the course if you want further detail. And then what you have next is swing traders. Swing traders are 90% of the time they're gonna be Forex traders, because Forex is usually open 24/7. You can also, I'm just saying this is usually what people do if this is what they are. I'm not saying you can't be a swing trader trading stocks. So you can definitely swing trade stocks. It's just the market's only open from 9:30 a.m. to 5 p.m. Eastern time, depending on where you're from, of course. But swing traders such as myself will take a trade, let's say on the daily, and let's say I take a trade. This is January 26th. I won't exit this trade until wait. This is this year. Okay, this is a Monday trade. I'll hold this trade until pretty much that next week, and I'll make a huge profit. And I can hold this trade. If I held a trade for this long, guys, this will be immaculate profit. But basically, I do trade on the higher time frames. So those are the three reasons mainly that 90% of traders fail, because they either A, revenge trade too much, B, they take multiple trades and don't really have the psychology built in or the education, or they just don't know what to trade, or they don't know how to trade at all. Like, for example, I'm just gonna give you guys an example. I can already tell this market is about to hit a huge reversal, because not only we're in an uptrend, and this is AUD JPY, basically the Australian dollar versus Japanese yen. We're in a uptrend right here, as you guys can see. I'm gonna draw this out for you guys. This is a strong uptrend, but as you guys can see right here, this is a weak high, meaning that if we zoom in here, this candlestick is the highest point of this. Basically, it's the highest point of this uptrend, and I can already tell it's about to hit a huge reversal just from seeing it. Like, this is weak high, and I'm only saying this because, guys, listen, I've been trading for 3 years. I'm incredibly educated, and I've been doing this. I've been testing multiple things. I can just tell on the lower time. I can tell it's about to go down. Yeah, see, on the daily, as you guys see, it's already reversing, and it's gonna go basically either retest or it's gonna just keep going down. So that's usually why swing traders trade on the higher time frames, because let's say, for example, on the 1 minute time frame, okay, it's pretty awful to see, but compared to the 1 hour, it's still a downtrend. It's immaculate downtrend, but on the weekly, it's not as it looks on the 30 minutes in the lower time frames, etc. So yes, those are the main 3 reasons why 90% of traders fail. Hope you guys did enjoy this video. Again, if you have any questions, leave them in the comments below. Feel free to hit me up, guys. I'm on Instagram. I'm everywhere if you need to contact me, or if you even want more information, the course is in a link in the description below. My name is K-Neil, and I'll see you guys in the next video. Peace.